What's up, everyone? It's Karthik with MoneyVest. Welcome on board for another Market Open live stream. And here we are, full energy. Let's go. Let's do this. Tesla is reporting their numbers later today, so I will be live to cover that entire report, go over the earnings report as well as the earnings call. If the audio and the video is working well, just give me a thumbs up. I just want to make sure there are no technical or audio video issues, so just give me a thumbs up in the chat. We did have Coca-Cola reporting pre-market, so the earnings call I think is going on right now. Nexera Energy also reported revenue miss, EPS beat about $1.03 per share, and Coca-Cola coming in with about 77 cents per share with just a little bit under $12 billion in revenue. No sound. Ravitage, I don't know why there's no sound. If you want to reload, maybe try to reload. There should be sound. Check. Testing. I think there should be sound. I think we should be pretty all set. Just try to refresh, see if that works. Then we also had AT&T reporting their numbers. A revenue miss, $30.2 billion. EPS coming in 60 cents per share. Boeing with a double miss, negative $10 in earnings per share with over 17, almost $18 billion in revenue for the company. So some of the big updates pre-market, we got Boeing here, slightly down about 80 basis points. Then we've got, let's see, we've got a little bit over a slight decrease in Coca-Cola, I think, the last time I checked. Yep, 2.2% sell-off in Coca-Cola. McDonald's here continues to sell off from that yesterday's catalyst, down almost 7% right now. And of course, we got Enphase Energy definitely just seeing a significant selling pressure, down over 17% right now, with the next support sitting roughly down at $74, $75. Good day all. Sounds like that was self-pep talk, Karthik. All good here. Perfect. Yes, Tesla reporting later today. Very, very important numbers. We already know the delivery numbers. We already have heard from the We Robot Robotaxi event. Tesla is very flat right now, $217. And I'm going to see if I want to close out my calls prior to this event and sell new ones for next Friday, maybe a little bit closer to the strike, which is going to be closer to the market price, because that way I'm going to get a lot of premium for Tesla and also be hedged on this event going into today. So for example, if I look at next Friday's calls for very, very close to the money, let's say 230s, they're sitting at just under $5 per contract. Then if you come down to 225, I'm going to be looking at $6.50. So, that is a potential contract that I may end up selling, because Tesla, I'm not super confident, is either going to rally higher or not. So that is a contract that I'm thinking about selling, which is going to be a 225 strike for next Friday, $6.50. And that's going to have almost a 40% probability of expiring in the money. So, of course, getting up to 225 for Tesla is just going to be about a 4% rally after hours. But then, of course, it can also sell off, which is what I'm expecting, considering how bearish the market tends to always be with Tesla. So, again, we'll find out in just a few hours. So, I will be live to cover this as well. And definitely do share the live stream with everybody. I'm gonna schedule it for later today, and we'll be here to cover exactly what Tesla is gonna report and the earnings call as well, and listen in from Elon Musk and what he has to say about Tesla. So yes, that's gonna be the most important earnings for today. Enphase ended yesterday. We were part of the earnings call, listening into the longest ever earnings call that I've ever been a part of. Runtime of well over 2.5 hours, of which over 2 hours with just about Enphase's management, talking about the company, the products, the nuances about their technology, all those really important things. So a couple questions about Enphase that I'm getting here. CSP on Enphase today. I'm actually running low on cash in the options portfolio, so I won't be able to sell it unless, of course, I'm willing to get it down to $60 in the strike. Because if I close out my SOXL puts, I'm going to free up about $5,600 worth of collateral, plus the cash that I have sitting on the sidelines makes up for just over $6,200 right now in the options portfolio. So if I really want to sell a put, yes, today might be a fantastic day to be selling puts for Enphase, in the low 70s or possibly in the mid 60s. But right now I'm kind of running low a little bit on cash, so probably would not be able to take advantage of that opportunity. Yes, that is interesting, because if I close out my SOXL put for a profit, free up that collateral, and then receive an additional $6-7 per contract on the Tesla calls that I'm also planning to sell for next Friday, then I may have enough buying power to sell an Enphase put and then collect even more premium. So I think that might be a pretty good idea that I'm thinking about. So I'll have to manage that a little bit better today. As soon as the market's open, I'll look at where those SOXL puts are trading. Most likely going to be up like 90%. Yesterday they were up like 88%. So today I'm expecting them to be up like closer to 90-95% because we're also approaching expiration here in the next few days. And so I will be closing those out, freeing up that collateral, and then it really comes down to what Tesla is going to do, right? So Tesla is going to be the most important stock for today. That's the company that's reporting earnings. So SOXL right now up 90% right now. So that's how much I'm up for that particular option. So yes, that's where we are. Nvidia here down almost 1%. Tesla is down about 29 basis points, and then we've got ASML, which is also very, very flat, down about 1.3% at the moment. And let's see. For some reason, you always treat Enphase as your stepchild, Karthik. Not much love from you. Well, there's been love from me in the past. Of course, I've traded Enphase, as you guys know, that I had a position, then I got rid of it. Well, I was forced to get rid of it because I had sold calls in the 130s, and then I had my shares called away. I think 300 shares, that's what I ended up having. So called away in the 130s. And since then, I've not really traded it. So it's not like I don't love the stock. Of course, you shouldn't really be loving the stock anyway. If you're investing and trading in the market, it's really the business fundamentals and the company itself that we need to analyze. At the end of the day, that's what matters. The numbers is what matters at the end of the day. And if they're doing well, of course, there's going to be a lot of love from Wall Street. There's going to be a lot of love from us, but numbers tell us the entire story. And so for those reasons, I did a video on Enphase earlier today. I talked about it, yesterday as well. Quite extensive live stream. So all of my thoughts, all of my opinions have already been shared on this company. And right now, support level $73, $74. But if you are still very optimistic about the future post-2024 recovery in Enphase, I think today might be a pretty good time to be selling a put on Enphase. I'll look at the premiums and what they look like after the markets close. So Shrikant, yes, I'll suggest some appropriate strikes and premiums to look at with pretty low deltas for Enphase after the markets open. And I'll share that in our Discord as well. So don't you worry, we'll be talking about that as well. Okay, so let's see. What's your bottom on Tesla? Considering Enphase earnings and their outlook guidance, what is your price target or other fair value? I would say so. Vault, I shared that in the Enphase video, so please go ahead and check that out if you haven't already. Literally just did a video on Enphase earlier today, just about an hour ago, going over everything: the misses, the guidance, the margins, the net excluding IRA benefits, Inflation Reduction Act benefits, how that's affecting their margins, going over the balance sheet and the cash flows and the capital expenditures, the stock-based compensation, talking about the growth in the US and Europe, and then finally coming over to the net income expectations, the earnings expectations, the price to earnings multiple, price to sales multiple, and calculating the fair value based on different growth rates. So really a lot of things were discussed in that video. So Carlos says, I didn't like the latest Enphase video. Way too bearish on your end, buddy, but I'm greedy when others are fearful. So again, it's a very objective analysis. It's not really us. It's not really a bearish or a bullish video. If you're expecting a 20% growth rate on Enphase over the next 5 years and they can grow their earnings per share, by all means, Enphase is at fair value. If you feel like it's going to be 16% or 18% or 22%, 24%, then of course those numbers change, right? So at the end of the day, I really let numbers make the decision for me. So Carlos, I've got a simple question for you. What kind of growth rate are you expecting with Enphase over the next 5 years? What is going to be that non-GAAP EPS growth? Right now, there's going to be a 50% reduction in earnings per share from well over $4 down to $2.20, right? So 50% decline in earnings per share year over year. What's going to be that number in 2025? What's going to be that number in 2026? What's the growth rate that you're expecting for Enphase? And then so you can pretty much work backwards and then figure out your fair value, okay? So at the end of the day, it's really math. There's nothing more to it. It's purely math, right? So it's not about being bearish or bullish. It's just letting math and calculations and models help you decide what's the appropriate value for that company that you're looking at. So for non-GAAP net income for Enphase this year, $1.3 billion, right? down 50% from previous last year. Earnings per share also down. And if they're able to grow at over 20% and also demand a 25 times P multiple, then sure, you can make a case that it's trading at fair value. But if you've got a lower P multiple or a lower growth rate, then you're going to have to adjust those numbers accordingly, right? Because that's changing those assumptions. So, and you've also got few things to look at, right? You've got quarter-over-quarter gross margins coming down when you exclude for IRA benefit. You've got shipments obviously coming down, so math doesn't lie. So Mike is spot on. Math doesn't lie. Easy to rely on. It's the numbers that tell us the full story. Because at the end of the day, like we can make a case that okay, rates are coming down. That's going to be bullish for Enphase, sure. But how is that going to be affecting the numbers? The numbers will eventually tell us the entire story. And I've said this with Tesla as well, right? There's a lot of optimism around robotics and AI and FSD. We've got full self-driving, but how is that going to make its way over to the numbers? The numbers will tell us the entire story and whether the company itself is able to execute on this adoption for full self-driving, autonomous driving. If the answer is yes, it'll show up on the numbers. If the answer is no, we don't know, right? So the worst quarter was first quarter of this year. They haven't been improving since then, and interest rates expected to go down in 2025. Can't compare with last year coming from their peak. Of course, you have to compare with last year. Like, what? That's what year-over-year change looks like. I mean, NVIDIA, why is NVIDIA doing so well? They're growing compared to last year, right? So, of course, you have to compare to last year. You have to, what else are you going to compare to? Like, yes, interest rates coming down. That's, again, like I said, it's a good argument, but how is that going to affect the numbers, right? That's what we have to wait and see. So look, $76 based on 20% growth rate, 25 multiple at fair value, sure. But if there's any changes in those assumptions, fair value comes down even further. We're talking mid 60s, low 60s, maybe in the 50s. So it's all math. It's all numbers. So if you're looking at any stock objectively, it's all going to come down to numbers at all times. And even me with Tesla, like I've mentioned this before time and time again, regardless of how bullish I might be on Tesla, I've said this, that electric vehicle business is the only business that we can evaluate right now. For me, I've said this a million times, FSD, autonomous driving, camera-based vision, Tesla Vision, robotics and AI, the Optimus, everything Tesla's doing right now from an innovation technological standpoint is the cherry on top. It's like the sprinkles over the cake or something. It's the icing on the cake, right? But it's not the cake. The cake is still the electric vehicles. And that is what we can evaluate right now at this present moment because that's all we have. Everything else is a story. Eventually, if it becomes into actual numbers, sure, it's going to be great. It's the icing on the cake, but right now it's not. So evaluate the business for what it is and then make a judgment for what it could be. But that judgment cannot be overweighting, right? There cannot be like a 90% weight over what the business is going to be in the future. Because oftentimes we all, become very optimistic. We become extremely blinded of the story that's been told to us. And most of the times the companies underdeliver, right? So keep very, very real expectations of what the future might look like and go a little bit more conservative, right? Because that's only going to help you. And as I've always mentioned before, like I'd rather be conservative and right than be aggressive and wrong. Because if you're aggressive and wrong, that can be a blunder. But if you're conservative and right, that's good. You have your expectations very realistic. And if the company outperforms and does better, that's always a good thing. So, okay. Once again, thank you so much for joining, everyone. Really appreciate you all. Make sure that you drop a like and subscribe to the channel. Gold prices right now coming slightly off of their all-time highs of just over $27.58 per ounce. Crude oil getting rejected at that resistance of $71, $72, $73 per barrel. Volatility here just slightly back up to over 18, almost 19 right now. Karthik never wanted to give you a hard time today. That's totally fine. And look, it's discussions like these is what is going to make us better investors, right? I really want everyone to be more engaging. And if you disagree, that's totally fine because that's what makes the market, right? If everybody was on the same page, there wouldn't be any opportunity. There wouldn't be any dislocations. There wouldn't be any profits. There wouldn't be any profits if everybody was on the same page. It's because there are difference of opinions is what makes the market. because behind every trade, there's not just one person, there's two people, a buyer and a seller. If somebody's buying, they have a different thought process, different perspective over somebody who's selling at the very same time, at the very same price. So that's what makes the market. So without this, we wouldn't have a market. So it's always good, it's always encouraged to have those types of discussions, to discuss, what the business is doing right now, what they did last year, what they're expected to do in the future. And that's what investing is all about. So there's always going to be difference of opinion. That's totally fine. And again, like I said, that's what makes the market. Okay, Starbucks keeps falling. Do you think a good dividend stock? So I've actually done some analysis on Starbucks. I know that they're pre-released their earnings here, down a little bit over 3.5%. So, support level is going to be at around $89-$90 for Starbucks. Maybe I can do another analysis on this company very soon. But we've got a bit of resistance here at $99 for Starbucks. So a lot of consolidation sideways, selling off 3.5% after what looks like an earnings miss and a revenue miss for the company. And support level is going to stay put at $89 to $90. So we'll do an analysis on this very soon as well. Yes, pre-announcing was a genius. Took out the positioning for manipulation and during earnings. I think everyone should follow the lead. Yeah, that's actually a good point. Because, but then also like if you consider like the SEC is going to start fining companies for saying something else for when they're releasing their earnings and then coming out early, by 4 or 5 days. In fact, Starbucks was never supposed to release earnings this early, right? Because if you take a look at when they were supposed to release earnings, if you come over to next week, they were supposed to release earnings on over here. So this is Wednesday, October 30th. So they released a good 8 days early for when they were supposed to release their numbers. And that's actually crazy because I'm sure a lot of people were looking at options for the Friday expiring on 11/1, right? A lot of people were trading probably options on Starbucks for November 1st in anticipation of those earnings. And all of that is now out the window because they ended up reporting 8 days early. So if the companies have already predetermined set dates of when they're going to report earnings, I think that is where they should stick to those numbers, because if they're releasing earnings, if it screws up with the entire market of options, of the entire analysts, buy side, sell side, putting upgrades, downgrades, their entire schedule, calendars, there's a lot of things, right? So yes, while they may have been genius by reporting early, by not open to stock manipulation or whatever, if that's even happening right now, but I think it's really going to screw with a lot of options traders in general that are looking forward to the earnings of trading it. Because imagine if Tesla reported a week early and I was planning on trading options on Tesla like I am right now. I'm planning to close out my Tesla call today and then sell new ones for the next Friday. But then I wouldn't be able to have that opportunity if they reported early. So, okay, let's see. What price are you buying in, if you will, Jordy? Is that question specific to Enphase, or is that other stock you're referring to? Just let me know, and I'm more than happy to answer. Good morning. I'm planning to dollar cost average on Enphase from $91. I'm still optimistic on the stock long term, so that's good to hear. What is my fair value now on Tesla, Jasper? I think it's still closer to 150s and 175s. I think that's still going to be the level that I would consider Tesla right now to be fairly valued. But because it's been, trading at pretty much 217s, 240s, 250s, all the way up to 260s, I haven't really been doing much with the Tesla. Of course, in the options portfolio, I have been trading Tesla quite a bit, pretty much every week. But other than that, in the long-term portfolio, not really doing anything, just got the shares. I was planning on selling calls in the 300s. However, I was also a little bit uncertain if Tesla's going to just rip past that area of supply in the 260s. And kind of break out of that wall, and then I would be very, very close to the money of having my shares get called away a little too early that I'd like them to be. So I didn't really do anything with my long-term positions. So yes, for that, I think, and yes, I will be live for Tesla earnings as well, Sergio. I will be live at around midnight, same as yesterday that we were live for Enphase. We're going to be live for Tesla today. We'll take a look at the earnings when they're released. We'll take a look at the price action for Tesla after close, and then listen in to the earnings call together. Okay. Milan, thank you so much. Learned a lot from Kay that I don't hear from other channels. Thank you so much. I appreciate that always. How high do you think or predict the silver ETF will go? SLV. So very nice momentum higher as silver prices also increase. So if you come over to silver prices, I mean, commodity prices in general are on their way higher. Silver is up since October last year, up over 65%. And of course, gold is also moving up. So really, when it comes to that ETF specifically, it's really a question of how high these commodities are going to go, right? How high silver and gold are going to go. And I'm still very bullish on commodities. Like I do expect gold to, continue with this uptrend. And I could easily see 2,800 to as much as $3,000 per ounce for gold prices over the long term. So, that's going to be my target on gold. Silver, I don't really have any specific target, or expectations that where it could be trading at. Right now, $34 an ounce. Obviously the psychological levels ideally are going to be at 35, 38, up to as much as $40 per ounce here. And the reason for the commodity breakouts here is because of the deficits and interest rates going back higher. Inflation expectations are still pretty elevated, I would say, from a standpoint of whether it's going to reaccelerate or not. So those things considered, commodities often offer a very safe haven diversification, which is also very uncorrelated, meaning that they are uncorrelated to what's happening to equities, to the bond market, to real estate, to the dollar index, to the yields, everything else. We've done the analysis on this, and it's a good way to add exposure while also not sort of piercing through the risk of that portfolio, right? In other words, it stays different. It stays uncorrelated from the risk profile of the entire portfolio. Okay, any important economic data coming up this week? So nothing yet, nothing for this week that we have that's on the high impact. I think there's only maybe one thing, durable goods orders. From a medium impact item, again, nothing really that's on the economic calendar. If I remove from medium also, you can see how empty this entire calendar is. But what's really packed is the earnings calendar, right? So earnings, of course, is where the main focus is. With Tesla reporting later today, IBM, ServiceNow, Lam Research. These are 4 companies that are going to be super important. And then, of course, tomorrow we got S&P Global. We got Union Pacific. We got KKR, UPS. And later this week, we've got Colgate also reporting their numbers. So very low on the economic calendar, but very, very heavy on the earnings calendar. Okay, so let's see. Yes, going live on the Tesla earnings. Lockheed Martin, Cali, we covered that yesterday. So we had a full live stream on Lockheed Martin. I also shared my fair value on Lockheed. So make sure that you do check out that video. Record backlogs, $166 billion, 1% increase in revenues, over $17 billion, and over $6 in earnings per share. Over $1.6 billion of giving back to the shareholders in the form of dividends and share repurchases. Over 90 to 110 fighter jets deliveries expected in 2024 from Lockheed Martin. Working with General Electric, partnership with them. So there's all the notes, all the discussions for Lockheed were discussed in yesterday's live stream. So make sure you check that out, about 1 hour long. But you can skip to the last 10 minutes to hear my thoughts after the earnings call and my breakdown of the fair value as well. Okay, so let's take a look. Enphase Energy stock is diving Wednesday. Yes, earnings came out. Commodities are lazy horses, but very good bets for the long term. I agree. Yes, Nvidia. Want to sell Nvidia so bad. Nvidia, of course, has been pretty much trading near all-time highs again. Over $3.5 trillion market cap, down about 1% right now. For Enphase, is it fair to say that Harris wins, it pumps, Trump wins, it dumps? Yeah, I mean, I guess, because of the stance that they both have when it comes to clean energy. But I also think that for Enphase, that type of political debate is going to be less concerning. I think a bigger reason is going to be the marketing. And I shared this in my previous Enphase video where I ran a very simple poll, like a very, very simple poll yesterday of how many people know what Enphase does. Simple. Do you know what Enphase does? And do you know the difference between the technology of Enphase versus their competitors? And I was surprised and not surprised at the same time. Surprised because of the numbers themselves, and not surprised because I was expecting it. And we had over 53%. 53% of the 600 people watching voted for no. I don't know what Enphase does. I don't know how Enphase differentiates themselves from the competitors. So something as basic as understanding the technology behind inverters, the string inverter system and the micro inverter system. That's the game changer. That's the technology, right, that Enphase was talking about for the last 2 hours during the earnings call, that at a very base level, even the average consumer in the US may not know. And so they're not able to make those decisions whether to install an Enphase micro inverter or to go with Tesla string inverters or to go with hundreds of different other ones. Solar panels, obviously Enphase doesn't sell solar panels, but inverter systems and grids, who to go with, right? So I think there's also a lack of marketing from Enphase. The more complicated the product and the technology, the more difficult it becomes to market it, especially if you're selling it to the end consumer, which is households, people. If they were selling to other businesses and those businesses were taking these microinverters to make something of their own as a finished product and then marketing it to the consumer, it would have been a lot easier, right? Because then they wouldn't have to be the person behind marketing. So explaining the product, I've also kind of learned this, this very nice nuance of, if you are a company that is strictly selling the product to other businesses, so in other words, B2B, then I think the main focus should be on the product and the quality and the different technical nuances so that you can explain things better to your customers, which is other businesses. But if you are a B2C company, if you're selling directly to consumer, then your marketing needs to be absolutely on point. Absolutely on point. And that's what Apple does. Apple is a B2C business, right? Selling directly to consumers, which is households, individuals. And that's why their marketing needs to be on point. Explaining what the product is, what it does, how it's useful. That's it. But for Enphase, I think that's what they lack, is the marketing. So, okay. Let's talk about NVIDIA, Tesla, some of these companies. Tesla here at 217 right now, so basically flat at the moment. NVIDIA is dropping, so that's good. Down over 1.6%. They're reporting earnings on November 15th as of right now, unless they also pull a Starbucks. Or what was another company that pre-released their earnings, I think, a couple days ago? Last week, didn't we have a company that reported before when they were supposed to? I forgot what the name of that company was. Does anybody remember? I think we were talking about this on the channel during a live stream as well. Yeah, I can't seem to remember which company it was, but it seems to be like a pretty growing trend of these companies just reporting before when they're supposed to. ASML, yes. Yes, ASML. Oh, that was a pretty big one. Yes, we were talking about this the whole time. ASML, yes. Forgot about that. Forgot about that company. Yes, ASML reported. Yes, I own that stock. It's crazy. Look, I need sleep, folks. I have been deprived of a lot of sleep in the last couple of days here. And it's only going to get worse because we have more and more earnings coming up. It's going to get worse because we've got pre-market and, of course, pre-market and then of course post-market also updates coming out. Yes, ASML right now 713 right now, down about 1% at the moment. I'm actually really looking forward to buying more ASML. So the lower it gets, the better I think the opportunity will be. And then we're also doing some analysis on Carl Zeiss. This is a stock that I mentioned in our Discord that in my opinion has potential because of the fact that it's down so much from its all-time highs. So you can see that it's down from 198 euros down to as low as 62 euros. So down over 69, almost 70%. And just prior to this sell-off, I mean, just take a look at this trend from 2010 all the way up to all-time highs. This stock was up like 3,000%. So it's primarily insider-owned. There's not a lot of shares outstanding, only like 30 million and like 36 million shares outstanding. And 24.9% of this company is also owned by ASML. ASML owns 25% roughly of this company. So I'm also looking into this because it's also a very important link to the entire semiconductor ecosystem. And believe it or not, like NVIDIA, yes, they're doing incredible work, but they're dependent on TSMC, which is then dependent on ASML, which is in hand dependent on Carl Zeiss. Yeah. Okay, so that's where we are. Tesla seeing a little bit of a rally prior to the earnings, we will be live to cover all of those numbers. So don't forget to tune back in at around 3:30 p.m. Eastern, 3:30 p.m. Eastern, 1 or 12:30 p.m. Pacific. So 12:30 p.m. Pacific, 3:30 p.m. Eastern, we'll be live to cover Tesla earnings. CSP premiums are ripping higher. Let me just take a quick look. I'm sure they are, given how aggressively the stock is selling off. It's down over 14% right now. And then let's take a look here. So put premiums for next Friday, for November 1st. $75 trading at about $1.51. Then we got $70 is 43 cents. Yeah, those are pretty solid premiums that I'm looking at. 65 is still not a whole lot here. They're only as good as like $70 or something. Anything over $70 is solid, but below that, we're just so anyway. Thank you so much, everyone, for joining. I appreciate you all. Make sure that you drop a like and subscribe to the channel. We'll be live in a few hours again to cover Tesla's earnings. So we'll take a look at the post-market close earnings reaction. We'll break down the actual report, and then we'll listen in to the earnings call together. So tune in at 3:30 p.m. Eastern, 12:30 p.m. Pacific. Until then, make sure that you drop a like, subscribe to the channel. Also, if you want to get access to the entire MoneyVest platform, earnings calendar, economic calendar, market concentration, snapshot, MoneyVest index, a lot of other macro features, as well as doing entire fundamental analysis on individual companies. Link's going to be down below. We'd love to have you on board. Again, we're always here to help you. So if you have any questions whatsoever, just let me know, and I'm always happy to get back. Okay, thank you so much. Happy investing. I will